morning, everyone. Welcome to our Thursday morning trading room. Well, the market actually really got busy yesterday after all those announcements. The FOMC announcements, the Fed announcements. You can see some really dramatic declines. Big rallies back, another huge decline, and the market rallying back going into the closing minutes. So I was whining a little bit about the lack of volatility yesterday, or at least for the morning session, but wow, did things ever get busy through the afternoon, which is typical after those types of news events. So now we're just trying to get a feel for which way the market's leaning this morning, whether there's going to be another sell-off or if we're going to see a little bit of a rally still. The market's struggling with the resistance around the 6,000 area. We do have a early rule of 3 building here on the Eagle. The rule of 3, the counter trend signal for the Eagle. And what happens is we start printing signals against the band. So we have a bullish band, but we're producing sell signals. And with all counter trend signals, we first, A, require a trend, and B, a test of the extreme. So in this case, the extreme being the high. Here's the retest, and we've technically completed all the elements of a rule of 3 signal, even though we've only printed 2 counter trend signals. You could set up to short below the low here. It's a little tricky. Counter trend trades, by their nature, are a little riskier. But if this market's going to get anywhere near yesterday's lows, which were around the 59.30 area, then there could be a major sell-off here this morning. The Hawk already bearish, first micro-macro cross there. The Falcon working a trend change signal. And the Raptor, a very early cloud crossover signal. This will not print a number 1 signal, but it is forming a cloud crossover. You can see our clouds going from bullish to bearish. Here's that characteristic pullback that we see into the cloud. And then if the trend will continue lower, the market should bounce the cloud out and we should get a sell signal. So we got a couple things looking a little more bearish. All right, so we're short now on the Eagle here, and I'm really gonna swing for the fences on this one. So I'm going to bring my break even down closer to where my profit target was. Maybe I'll put my break even at around halfway. Looks like there was a little intermediate support here yesterday around the 59.50 area, so that's likely to, well, if not turn the market, at least be a good spot to take the break even. All right, so far so good. Now, if you really wanted to try to ride this trade out, if you wanted to hang in as long as you possibly could, it means you've got to be very, very generous with your stops. You got to wait for these little, well, here we'll do it on the upside. You've got to wait for these little reactionary areas to form and then for the market to trade through before you actually bring your stops up. And that's one of those trading things that's much easier said than done, of course. All right, I suppose I should get a little bit more aggressive with my stops. We're getting a little bit of open profit going. And you can see 59.50 being a little problematic. I'll take the trade to break even though we're just a tick shy. People ask me sometimes why I blank out the P&L. It's because for me, I try to make my decisions based on what I see on the chart, even though I know that I've got a fair amount of open profit here. For you, it might be different. For you, you may be more comfortable just taking the profit when you have it. There is absolutely nothing wrong with that. I know there's a lot of, well, a lot. Oh, can't take that now. Okay, let's go back to parabolics. There we go. That's all I'll give them. All right. So I didn't do any worse. And I just did not feel too much like riding out that swing that is probably coming our way. But still a nice little trade to start the day. And we had comparable follow through on the other tools as well. So we'll see here in a few minutes whether I should have held on a little longer or whether that stop out was a good place to take profit. So far, I have to say, I'm not too disappointed as the market tries to pull back into the hard edge of the trading band. That was my concern, of course, because my entry was way up here. If my stops were at break even and I get a pullback, I had about $200, $250 in open profit that I did not want to give back. I don't mind giving back a couple of dollars, but I certainly don't want to give back all of it. There's a lot of truth. You've probably heard this trading saying as well, that you should never let a profit turn into a loser. Never let a profitable trade turn into a loser. I think there's a lot of wisdom in that expression as well. So the buyer's trying to fight things back here a little bit. It looks like the 59.50 area is in fact going to be a reasonably strong support zone. The Hawk and the Raptor both introducing some yellow bars into the mix, which tends to occur when the market is trying to change direction. It doesn't always mean it's going to succeed changing direction. It just tells you that the market right now is pretty neutral. To me, it looks as though we have a slightly bearish bent on the day, but That doesn't mean we won't see the buyers rally it back. In fact, I mentioned this a few days ago. If you're staying just with the overall trend, which still seems to be up, you could concentrate on just the buy signals, in which case you have a buy signal right here on your Raptor. Counter trend trades, a lot of times a second push entry is desirable, just to look for that little added momentum before committing. The target, of course, the hard edge. We have a little bit of a mess now, don't we? All right, I wonder whether we're going to get some follow through on this next leg lower. And the number 3 signal actually was also a double pullback signal. The double pullback occurs when the market moves into the cloud, comes out, produces a signal, moves back into the cloud, comes out, produces another signal. That's a double pullback. That does tend to have some good probabilities of follow through to it. So I think, would we have found our profit objective? Yes. And now we're coming back with yet another counter trend signal. This will be yet another number 2 signal. And let's see if I get a second push on that one. Okay, so I know the limit. Oh, and now they're coming back with a sell. Wow, they're really violent here. Okay, so I know the limit of the market, right? The signal engaged, it flinched, it retreated. I know the current limit of the buyers. I know where they're running out of steam. I know where the sellers are getting really anxious to knock them down. So you can see we're getting yet another smaller test at the extreme. You can actually bracket this trade. This is an interesting little trade. I wonder if I can set it up fast enough. Hold on. We can do an OCO and we can short the low and we can buy the high. So a tiny little channel here, how the market is just kind of pinched. Now it's probably safer to short. Oops, I forgot to enable my stop. That's why that blanked out. It's probably safer to short this low if you wanted to bracket the market. So let me try that again. So I'll short there and I'll buy here. And I'll make sure I have a stop enabled this time. We'll go with the ATR. All right, so the OCO brought us in. I probably should hold my stops back a little bit. There we go. We're settled on the secondary support zone here. That's kind of holding us up. The buyer is, of course, buying the market up from the 59.30, 59.35 region yesterday, which is probably why we're getting a little stuck here. So I'm going to put my break even at the low of this bar. No, don't flinch. Get down there, use. All right. Well, that was unfortunate. But you can see how the original little OCO and that number 3 signal actually worked out pretty good. Unfortunately, when you do the OCO order, remember to have your stop enabled. Otherwise, occasionally the programming will stop you out immediately after you get filled. Don't know why that is, but it's a little glitch that does depend on your trail indicator being enabled. I think it's just the programming is looking for a stop, it doesn't find one, so it takes you out of the trade. I'm not sure. All right, well, here we are. And it looks as though we might try to slip lower still, get back to that 59.30 zone. Elmer's asking, Eric, the OCO does not put in a target as well. Is this correct? Actually, Elmer, I believe it does if you have your trail indicator enabled. So let's just demo one here. So I turn my OCO on and I'm going to short here, and remember your OCO orders are live when you put them on, so you can place them away and then bring them in once you get everything set up. So let's say I'm going to go with a parabolic strategy. Make sure it's turned on. I have my targets enabled, and let's say I'm going to go 100% all in, all out. And it looks like the market's flinching there a little bit, so I'll bracket this range. Now, this is not a real trade, folks. I'm just kind of demonstrating here how the software works. Although we're back down, yes, we're back down around the 59.35 area, so we should see a little bit of a follow through. Elmer, I don't know why I didn't get my target. Oh, you know what? I changed this while I was already setting up my OCO trade. But you should get a target, providing you don't make any changes while you're setting up your trade. But so long as your trail indicator is enabled, you'll get your stop, and you should also get your profit target. I should have maybe left that on. I have a feeling that might head a little bit higher. Sorry. I'm terribly sorry, folks. I didn't mean to cough in your ear. And yes, you're right. I had the audio blocked. What I was saying was just the dangers of a counter trend signal. If you're losing money, you're probably taking counter trend trades. If you take a look at your trading journal, I bet you dollars to donuts that on your losing trades, the vast majority will be attempts at counter trend trades. So first off, you want to try to avoid the counter trend trades altogether. And secondly, the best way to set up for a counter trend trade is to first make the market break a trend line. In this case, we have a downtrend line. Now we're actually getting above the trend line, and we don't want just a itty bitty break like this. We want like a real break. And that shows us that the current trend is getting a little bit weaker. And we're going to look for a retest and then an indication that the market is going to continue higher. Those types of counter trend signals will have a higher probability of success than, well, what shall we call them, an early counter trend signal, when you try to get on board too quickly, too early. So counter trend trades really, really tough to do. In fact, I've heard some traders say that until you're making money on your with trend trades, you should never take a counter trend trade. Okay, so we're obviously we've breached that bigger trend line that I had drawn there. So we'll see now if we get a bounce and a bounce off the hard edge here, another test of the extreme, and a rally up. That one could actually end up carrying the market a little bit higher. Yes, those darn trends. You need to stay with the trend really as much as possible. Right, so the hawk already a little bit early on that first micro-macro cross signal, and you have a chance at a second push opportunity here as well. In fact, I think I might try to run this one out a little bit. Not that I'm expecting a huge counter trend move, but rather the scalp target might be a little bit tight. I may allow the market to pull back a little, maybe even back to this 59.50 area. It may get up there before we see a pullback or a hesitation. And what I'll do is I'm going to bring my break even up a little bit more as well to accommodate. And we're getting close to the hard edge, so a reaction is likely. I suppose the other problem with counter trend trades is that you really got to be patient with them because the market takes a while to turn around. Well, if the buyers don't show up soon, gonna get spanked trying to buy into a descending market again. It's what happens when you end up trying to pick tops and bottoms. This 59.29 quarter would put us below yesterday's low. So just gives the buyers a second chance to try to rally the market up, if in fact they are going to try to buy it up. Oh dear. It's not looking good for the bulls. Here comes the first micro macro cross lower. Well, if they lose their grip here, I'm probably going to get tagged, and the market will resume the downtrend. So it's do or die for the buyers right now, and not looking very good for them. Geiger counter pulling over here to the short side. The Eagle working a trend change signal, the Falcon producing a trend change signal. So across the board, we have some shorting signals. Sorry about that. I have to keep muting my microphone here. I'm having a sneezing fit this morning. Elmer's asking, Eric, is there a way to get the account performance in NinjaTrader shown by account or by trade, regardless of how many contracts and not by contracts? All right, hold on a second. So I think this is the window you're referring to. I'm not sure, Elmer. I very rarely use this. Um, maybe one of those toggles will do it. I'm sorry, I'm not much help when it comes to this particular part of NinjaTrader, but you know, um, NinjaTrader support is excellent. So if you send them an email with the question and maybe a screenshot of what it is you're trying to do, I'm sure they will help you out. All right, so another decent move to the downside. We're an hour into the session. Very often at around that 10:30 Eastern mark is when the market will attempt many times to do a reversal. Not a full-on reversal, but rather kind of a profit-taking type reversal. Okay, we're on hold here for a little bit. Here's yet another number 2 signal, another counter trend. And you know, the only good thing I suppose about a counter trend signal is the risk. You're able to minimize the risk in most cases. And you definitely know when you're wrong. As the market attempts to break out higher, and it's going to get back into this old resistance. It's going to get back into this old resistance. It may try to knock the market down yet again. Well, we're just kind of fumbling along here. If we do form a bottom in this market, it's going to probably be a little extended. Most bottoms and tops, for that matter, are. The market may thrash about here a little bit. The key will be to watch for higher swing lows. If we get those, then we're probably going to be off to the races. Without those, the market's very likely just going to be in a sideways trading range. So we might have, well, we definitely have a higher swing here. We may see a higher swing here. I find that if we get 3 higher swings, that's usually enough to maybe not make a full trend change, but certainly give the market a little bit of a boost. Don't think there's much else going on anywhere else. No. The Hawk, very, very neutral, a lot of yellow bars. The Falcon, again, showing that hesitation of the market, that consolidation that's going on, the trend line filter, everything breaking up. The Eagle still predominantly bearish. right, so what is this now? My third counter trend attempt? It just shows you how counter trend trades do not want to work out. I have a feeling that the market may end up in a little bit of a trading range now. I think the sellers have pretty much done their thing, and we're just going to see the market kind of bounce back and forth. All right, so if we have developed a trading range, it possibly could look like something like this. That's a rather small range. It may be a larger consolidation, maybe something like that. Oh, finally, at long last, we're getting a bit of a retracement after the market being in a downtrend for almost an hour and a half. Again, I don't believe that this will cause a full-on reversal, but we could see, I think, an ambitious retracement would be back to the 59.50 area, or perhaps even the top end of this range, 59.45. I think that would be a rather substantial move higher. Okay, we're getting a decent little retracement here, a little bit of a bullish rally. Yeah, Mark, I'm with you. Mark says the old insult to injury tactic the market plays. I got stopped on that one too, only to watch it go in my original direction. You win some, you lose some. Oh well, on to the next. I hate it when that happens. And you know why it does happen, of course, is because traders know where everybody's stops are. You know, you don't, everybody always wonders, you know, how do the market makers, the big players, know where everybody's stops are? Well, it's really quite obvious, isn't it? It's always below a support level, it's above a resistance level. And small traders tend to keep their stops very, very tight. Experienced traders or bigger traders tend to keep their stops further away because they don't want to experience this. Right? So we got a valid number 2 signal. The market comes down, tags you out only to reverse and head higher. That's what Mark means by adding insult to injury. And I've even had it where they'll tag me to the number and then turn and reverse. So if at all possible, keep your stops as far back as you can manage. Because, of course, it's not a loss if it doesn't get hit. If you're able to keep your stop out of harm's way, then you should be all right. Yes, good point here. Mark says, I refuse to move my stop lower, one of my cardinal rules, and that's exactly right. You don't want to find yourself in a position where, if this is the initial stop on your trade, and the market starts moving against you, you don't want to find yourself in a position where you keep moving your stop lower and lower and lower. That's a good way to mess yourself up as well, because what you're going to end up doing is, if you've made a bad decision and you're on the wrong side of the trade, again, you're adding insult to injury. You're incurring a greater loss than you needed to take, and you're really going to mess up your risk percentage, how much of your account you are risking. And that's probably a good place to wrap up today. So if you're going to continue trading today, I think, given this little bit of a bullish push that we've seen, there's going to be a little bit of a retrace here. The buyers will try to push it up again, but honestly, I think we're just going to see the market kind of moving sideways. Move back here to the 59.44 half area, 59.45 would probably be significant. And I think that's where the sellers may be hiding out to try to knock the market down again. And we'll close today with Mark's last comment. He writes, take your lumps and look for the next opportunity. Took me a while to learn that early on, and it's a lesson actually some traders never learn. If you're trading, you will have losing trades. I hate to be the one to break this to you, but the sooner you get used to the notion of accepting a loss on a trade, the better off you will be. If you take a losing trade, try to figure out what you did wrong and then correct it. Do your best to put it out of your mind and just go forward from there. And if you can't, then at least stop trading that day, or go into sim mode, or do something that you're not going to cost yourself more money. But traders, it's part of the business. You're going to make a bad decision, or the market's just going to fool you, or your stop's going to be too tight. But if you can figure out what you did wrong on the trade, then perhaps you can correct it for the next time. Yeah, like Mark says, it happens. It's part of the job. Part of the job description. All right, gang, I will see you again tomorrow morning. We'll talk to you then. Bye for now.